Hello, everyone, and welcome to today's No FOMO Charts, Stocks, and TA live stream. First off, just want to say thank you so much to TradingView for allowing all the traders and analysts to stream here on the TradingView platform. Before we begin, let's just have a few moments of silence for the tragic events that happened this month. Thank you. So, stock market earnings season continues this week in the USA. So we have some tech stocks, some defensive stocks, and a couple finance companies that are reporting earnings. Some of the big names, Microsoft, 3M, Capital One, some of these global companies, Johnson and Johnson, Verizon, Texas Instruments, Tesla, one of the big companies, Boeing, AT&T, IBM, Visa, bunch of airline companies, Alaska Air, American Airlines, Intel, the chip maker, MasterCard, Southwest Airlines. We have some energy companies towards the end of the week, like US Steel, Valero Energy, Chevron, etc., just to name a few. So it's kind of a big week. It's not the biggest tech week in terms of Apple, Amazon, Google, etc. That will be apparently early February. That will be apparently early February. So we'll just be waiting out for that, for the big names, for that data. But for now, the economic data we have this week, we also have flash services, data manufacturing index, the advanced GDP, that's important this week for USA, durable goods, unemployment claims, new home sales, the core PCE price index, which is related to the producer wholesale inflation number. That's important. Last week, we got the CPI number. Now we get the PCE number. So it's not the PPI number, but this is core PCE. Okay, pending home sales, consumer sentiment out of UOM. And again, this week it's USA stock market earnings season. It's big moves, big volatility probably going to happen in the market this month for the next 30 days. So if somebody is a swing trader or investor, if they even want to get into the market, we have to be aware of these fundamental changes. In other news, IRS tax reporting season for citizens begins here in the USA, meaning people can begin to file their taxes. This Thursday, it's interesting, the US FDA is going to discuss the future of COVID shots, booster vaccines, the jabs here. I wonder what they're going to change. So we're going to have to look out for that. The USA Federal Reserve also has their meeting for the interest rate policy changes at the end of this month, January 30 to February 1st. And just kind of what's happening in the news corporate wise is many companies are laying off employees. Very unfortunate, but that's actually a byproduct of what's been happening for the past 3 years, but also the interest rate policy changes is could be the impetus for that. Trying to bring inflation down, balance out demand and supply in the economy. Very unfortunate what's happening though with the layoffs. Okay, so let's go ahead and get started. Let's take a look at SPY, the S&P 500. If you have checked out my profile in terms of the ideas I have, you'll know that in my SPX idea, just for a quick recap, is I was watching this potential breakout. It is attempting today, actually. What I'm talking about is this potential upside down head and shoulders with the neckline just about here, starting around 4,030 or 4,000 itself. However, we're not really in the thick of earnings season right now. So Apple, Amazon, Google, etc., the big tech names have not reported earnings yet. So this pattern could fail. It could definitely fail. Yes, the mega target is 13 to 14% to the upside, which is why I labeled this yellow as the resistance, but there are plenty of resistances on the way up. That's not the only one in the details. So it could be 4,300, 4,100, 4,000, Someone's also saying 4030, which is basically correct. 4300. Okay, those are the upside targets. Also, we have support down here at about 3800, 3700, 3500. So it could go either way at this point, although this is a fairly bullish pattern. It could also mean that the psychology of the market, or people are thinking, oh, inflation is going to slow down in the next 3 to 6 months, maybe. So then companies and investors are trying to get in on the price action they don't want to miss the bottom, so to speak. Hello, welcome on TradingView YouTube and Twitch. Welcome. I'm probably going to go for an hour today. All right, so let's go. That was basically a very similar analysis to SPY. It's riding this trend line to the upside right now. This is a little off. Sometimes you have to adjust your trend lines. But it's trying to break out of the wedge. It's trying to, so this upside down head and shoulders on SPY still applies. Maybe this might work. 14-15% from the neckline breakout. I mean, that takes us way up here to approximately 463. This small target is just, this X up here is just the high low. Okay, if it hits the higher high, 430, maybe I pull back to 409, retest that resistance as support, try to get a higher high if earnings are good. If earnings are not good, then you could easily see we're at the top of this resistance. So it could definitely double top. So I was saying in my scenario, the bearish scenario would be double top and then pull back down. That could definitely happen. If earnings are bad for many companies, let's say more than 50% of the major companies that are reporting. And then we also have FOMC who is going to say it's going to be probably mixed. That's what my anticipation is personally, that they're going to say they're probably going to have to keep the interest rate high for a sustained period of time, but the increases in the rate will be smaller over time. And then they need to see considerable data in XYZ numbers like inflation, labor market, wages, unemployment, before they can start reducing those numbers. But the market is trying to price that in and get ahead of that curve faster. Just want to caution people. It depends, right? If somebody's a day trader, swing trader, there was a very nice low here back in October, another low end of December, but then now it's trying to ride its way up. Can we break above the resistance or not? That is the big question, and it's dependent on earnings. All right, QQQ. Similar, but not quite the same. We had this multiple bottom support off of 260 and bouncing. So now on the weekly, maybe this might turn into a nice double bottom bounce. It's right at the resistance of the gray line, 291. If we can bounce out of here, 291, and try to rally all the way to 324, you know, investors, you know, the newscasters are going to be happy about that. Finally, some positive relief. This is a descending wedge pattern. Sometimes what happens to the descending wedge is at some point it bottoms out temporarily at least. You could have this fake breakout, or sometimes you get the real one. That's why there's two targets up here, either bottom of the wedge or we have a nice breakout because of positive earnings and inflation related interest rate topics and data that might actually have us break out. Watching it very closely. If we back up for a second, I'm on the weekly here. I have to turn the candles on. There's no real big shooting star or evening star pattern I'm seeing yet. So it's kind of in the middle of whatever move it's trying to do right now, the market. And we're starting earnings as well. We just started the week. Dow Jones on the daily, losing a little bit of momentum, but like I'm talking about last week, it's kind of going sideways right now. We could box this into a little parallel channel using the parallel channel tool. Not quite perfect, but it could be a flag. Somebody might say this is a little consolidation. I just call it consolidation because it's so rectangular. But we had this double bottom W support bounce off of that, rallied very nicely. Let me bring up some indicators. So now if we look at some short-term moving averages, we can see that it's consolidating to the side. Price bouncing off of probably a 5-minute or a 15-minute low. So you can see how the 5-minute for today rallied, pullback. So if you, I mean, if you're a day trader, you know what this is. If you go way inside on 1 minute, you have some oversold conditions, another nice little rally on the ETF, and then shorting down for either fundamental reasons, news reasons, or there's a double top today in that little market on the 23rd. So in terms of the trend line, broken to the downside now. You want to watch out for if you're a day trader. It was going in the uptrend. We had this resistance falling down, so watch out for a potential lower high if on the day trading side, because this isn't even low. The price isn't even low right now. It was low to get that little scalp if someone's trading futures or something like that. But I want to watch out for that. The swing trader mentality is okay, it's already on the 1 hour, 4 hour. It's not quite into the super overbought 80, 90 RSI for now. We're just kind of stuck. It's in the middle of its move right now, a little bit of consolidation pullback. So 5% is the range here. It's hit that middle heart line, this little dotted red line. I call it the heart line, the middle line, the halfway point. So it's either going to break out, might pull back, move a little bit on the day trading side before it tries to make a move either down or up. From an investment standpoint, the weekly, no clear. Well, there is a double top. This could be potentially interpreted as a double top in this yellow zone, right? Because there is a resistance at 345. The price is not broken out above that. The only good thing is you have a weekly golden cross, which could be very powerful. These EMAs crossing up. We'll see. We shall see. But Dow Jones, if we really think about it, we just turn off all the indicators and look at the price. We retraced a huge, large amount from October 10th all the way up. We're basically almost 20% up from the bottom. So some swing traders are going to take some of their profit. We just want to make sure we're not getting into a fake out situation where, actually inflation is going to keep going, interest rates keep going higher, and then if we have anything bad happen, we could have a move down. This is a very ugly chart. It's ugly. So only two things are going to happen long term is it's either going to hold the support above 326 and we try to rally out of here as inflation goes down, hopefully, and then over this whole year, or not. The other scenario is we make a lower high and then the bears just, it's hard to see, but the bears take over and then we pull back down again. But this is a very ugly pattern. Probably because the economy and stock market itself, what's happening right now, it's not a pretty picture in the data. All right, let's move on. We'll come back to DXY. Let's look at oil. Take a quick look at oil on the weekly, still in this downtrend weekly consolidation pattern. We did have a nice higher low beginning of January. Still kind of, there was the head and shoulder potential, but that didn't actually pan out. So let me just erase everything. It looks crazy. If I would chart this fresh, just get a resistance going in. This is what I'm seeing with my eyes right now. At least this pattern exists. Thank you for the follow. I appreciate it. US oil trying to break out right now. Attempting. It's probably following Dow Jones. It looks exactly like it. Let me turn my watch list off. So you can see a descending wedge. The wedge, not a triangle, wedge pattern. And it's trying to break out high low. Okay, if it's going higher high, where's that resistance at $77? The immediate support right under 70, the support at 64, and probably support down here at $60 if we're watching for that. The measured move of, I call conservative measurement, is actually fairly large, 20%. So if it goes up from 20%, $85 is that range. If it falls back down, it could be like 56, 52. It could be 56, 52 area. One moment, please. Seeing something on the live chat, one of the live chats. Okay, so it could hit 56, 52 range down here in terms of the downside. If you look at these EMAs, it's still technically death crossed. So the only good thing is the price has broken back above the $70 200 EMA area on the daily. Now, for it to golden up cross, this has to stay above $70 and basically go back to 75 or $80. So our support right now, our line in the sand is 70 or 65 or 60, right? We're looking at that. Just quick glance at the weekly. We did have a nice support bounce off of that yellow line down here, trying to break out. It might consolidate. That's the third scenario. It might just go sideways, the price. So it's really up to the government or corporations in terms of we need some big fundamental changes to see, oh, are we going to go up? Are we going to go down? Or are we going to go sideways? It remains to be seen. It's attempting a breakout though. If somebody wants me to make a call is, oh, well, we have a bullish bias right now because high, low, high. It's trying to find the highest high before it bounces back down. We'll watch out for that. Day trading timeframes are different. I'm looking from a swing trader lens right now. A day trader, excuse me, it's a swing trading lens on the day time frame, the daily. I'm looking at the daily right now, almost like an investor. Natural gas got sold off to the downside, very, very hard down to its support zone area. Here is where I might want to pull out the volume profile. If you have a paid TradingView account, I believe you might have to get at least a pro account, but you can, it's in here somewhere, volume profile. I'll just use a visible range. So you can see some of the support levels. It's obviously natural gas has been downtrading. So if we just look at maybe 2019, probably just looking at 2018 to right now, you could see where the big little spikes on this volume profile. This is $23. There's a 19. There was not much support in the $16, $17 range. That's why we just kind of crashed on that. $12. And then if we finally hit the $10 range, there is not much support down there at $8.50, $9. We had a little nice bounce today. Attempt on natural gas. So I'm watching for that. It almost reminds me like a little crypto. If this head and shoulders hits to the downside, we have some little, it's like throwing a ball down the stairs or down the street. Sometimes I just think of it like that, very simple. If I throw something down, it's going to bounce down until the momentum stops. Then I might enter. Where that stopping point is, that depends on basically the traders and the investors, the big money. Whoever's shorting and selling this thing needs to basically stop. And then once that happens, you might get a reversal, might get a double bottom, might get a higher low, might get upside down in the shoulders, might just get a V-shaped recovery. If there's a fundamental change regarding the supply and demand and price of gas, natural gas, especially in Europe, USA as well, immediately could go to 1267 or rally up to 1563. It really depends. Watching this one a little closely because it is very oversold on some of these swing trading time frames. Especially on the daily, could be a little bit of bullish momentum that's building. That little squeeze is building. You could see it. So this MACD opening up the histogram, you get that first green tick. You just get that little MACD cross. You have some RSI building. The pressure is building. Might get a little bounce going on. So just watch for that. Weekly as well. I mean, the weekly telling me, wow, we might bounce up to $14 or $17 over time. It's going to take time. Not in one day. This is not Bitcoin. All right. Let's go ahead and move on. Just want to point out to people, today I'm going a little bit slower on these charts because the technical patterns and the ideas can apply to almost any chart setup that you're looking at, that you're watching. It could be a crypto, it could be stocks, it could be ETFs. You could be day trading, you could be swing trading, could be investing. Forex is a little bit different, leverage, because it's micro moves magnified by the leverage. So, something's not going to move 10% in a day in Forex typically, unless they're leveraged. But the core concepts remain the same. So when I look at this gold chart on the gold ETF, okay, I see. All right, golden up cross on the EMAs. We had the support balance a long time ago. We broke out of that trend line. It's been rallying, holding. So if I probably switch this to a 1 hour, it's just riding the EMAs, just riding the up wave. Every dip was a nice entry. That's the thing. When it starts uptrending, these dips are the supports. However, when it starts floating up in the air, this is when I start to get a little bit cautious. When everyone thinks gold is the greatest buy ever, you want to get a little cautious because it's just like that ball analogy. If I throw something as hard as I can straight up into the air like a baseball up into the air, it will stop at some point. And you could visually see the momentum change, flip around, and it'll start gravity will pull it back down. It doesn't quite happen so predictably for stock prices, but the general idea is the same, long-term idea. We're just riding. It's riding the up wave right now. I'm just checking this Bollinger Band to see is it sticking out a lot, like back in March. If it is, maybe that could be some mega top. The island gap up, the shooting star, that hasn't really happened. That's not really happened right now. So the frame of reference for price, I would look at this early 2022 gold price area right here, right? Or it looks very similar. We haven't had a large red pullback yet. We could see it. Once we have that shooting star, then maybe I'll make the call if it's in time for the stream. You can see it. It hasn't had its mega FOMO rally where everyone's trying to capture the last of the gold gains before it pulls back down. Again, it's ugly chart. Except for this setup down here at the support was that's very nice looking. But when it just, if you look at the price action, it's so volatile. But for trading, that's what we want. Silver, very similar. Very similar. What I'll do for silver chart is back up on the daily, go all the way back to this 2020. I like to get a Fibonacci from low to high. Fibonacci from low to high, just upside down head and shoulders on the 618. I mean, such a textbook setup. Beautiful. I love this. Love seeing that get tested and making its move. 18%. Do we hit the target? Yes, exactly 18%. People sold off. So now we want to watch out for, wait a second. Let's not get too FOMO mindset. If you just look at this for the first time, we say, or I say, if it's too far, you might want to let go of the trade emotionally. If it's already went up a lot, maybe let go of like half of my mental and physical emotions of wanting to get this trade, because it might be the short-term trade might be over when I'm talking about day trading. If you go to like a 15-minute or 1 hour, it's even starting to consolidate. It's even starting to consolidate, right? You see this rounding top action? That's not really a trend. It's consolidating, going to the side. That's kind of weak. So there's obviously probably a large sell wall, or there's a big seller up here that's holding the 2250 line and saying, it could be an institution just saying, we're going to take some of our gains of this 20%. The target's done. Swing traders know, all right, I'm going to move my stop loss right here at the 382, 2150 and just let it. They got stopped out today, but they're stopping out into 15% profit, which is beautiful. We have a question here on TradingView. I can't really see the question. For how long have I been trading on TradingView? I've been trading for 5 years. Chart analysis and trading for 5 years, stocks and crypto. So if you've been a hardcore crypto trader, 5 years can be a lot of experience, because if I was on the market basically all day long, 4, 8, 12 hours a day sometimes, doing either crypto stocks or both, you get a lot of experience. You get trading experience in crypto because the crypto market is on technically 24/7 every day. You get different opening in the market in terms of Asia market open, Europe market open, USA market open, just to name a few of the biggest areas. So you get to practice paper trading or your swing trading. You'll basically know. And it's a good segue to just talk about if you're a beginner trader or you're just getting interested in this technical analysis or trading or investing, there's the wonderful paper trading system here on TradingView. You just click the trading panel. You have to make a free account on TradingView. You just sign up. Trading panel, paper trading, connect it, reset it if you want to. Put in the commission settings of your exchange, your stock exchange, your crypto exchange. This, for me, sometimes 0.05%. You change in all the trading settings if you want to see stuff on the screen. And then for crypto stocks, you have to do it in the stock market open hours, which is basically 9:30 a.m. to 1:30 p.m. Eastern Standard Time, like New York time. If you wanted to practice trading crypto, you could do that anytime. You just pull up a Bitcoin USD chart, BTC USD paper trade. I mean, I could just randomly open up the DOM order screen, wherever it is. Here it is, the order panel, and start getting some tools out and understand that, all right, if I was to randomly buy Bitcoin right now, what's my reward and my risk? Well, the immediate is 3% to the downside. There's a support right here at 22353. And then the immediate minimum target would be 2 times that small amount of capital, 6%. And then you could practice putting the numbers in here. Let's say you want to buy. Where? You want to limit buy. You want to set the price. So what's the price right now? 22,977 on this Bitstamp chart. For easy, we'll just use whole numbers. I'll just do 1 unit of Bitcoin, which is actually a lot of money. It's $23,000. But for the sake of this example, we'll do 1. Where's my take profit? I just put it up here in the green line, the green line up here. That's my take profit. So that's basically 24,406. Where's my stop loss? We almost always need, I'm just going to say we always need a stop loss down here at where? Let me make it red color. That's how I like to do it. When I'm offline, I color it. So where's my entry? Basically 22977. I like to make it yellow. You could put in the coordinates. You could basically type in the exact thing. Let's just do it for the stream. 22977. And literally I have to type in my stop loss though. So I would recommend sometimes don't look at the right numbers. Sometimes it's wrong, right? Because this line, this is not the exact line. You know what I mean? So you have to kind of decide for yourself. Can't always trust the computer. As a user, you have to tell the computer what to do. So the user is the brains. The computer user can't depend on the technology 100%. So I'm just going to call it 22194. Okay. My stop loss, 22914. And now we just simulated this trade. It's a very expensive trade, $23,000. So maybe for sake of example, I'll size this down to only about 10% of 1 unit. So 0.1 unit, not 1 unit. So that's much, much less risk. And then the time and force. What do I want to do here? Do I just want the order for today only? Do I want the week only? Month only, or good? It's usually GTC, good till canceled. I'll do a GTC order and just let's go. We'll buy it. It's at the buy limit right now, 0.1. You might have to wait for it. We'll just come back to it. If you really want to buy something like right now, you're like, I want to buy this. I need to buy this right now. Then okay, you change to a market order. Right? You might have to kind of do it over again. Or you just move the buy order line maybe a little bit lower. And kind of just let it buy. Might have to zoom in a little bit. So the thing with paper trading is it's not really the exact in terms of buying. An exchange, sometimes it doesn't buy as immediate. So we'll probably just let that leave that alone. It'll buy eventually on its own. Okay. So hopefully that answered your question, give you an example of like trading and charting. And I would just rinse and repeat this, 10 times a week. Crypto, stocks. You will know very quickly. The market will show a trader what the trader basically is doing right and what the trader is doing wrong. It's just, do I have the time and the energy to just do this 5-minute example 10 times a week or once a day, or maybe 2 times a day, like one crypto and one stock for practice, for example? Do I have that time and energy if I want to be a swing trader? Years ago, I would do this a lot every day. Practice, and I would also do real trades. Okay. So hopefully that explained that to you, the question. We went for the chat in the question. All right, so let's go to crypto now. If you have a request, just go ahead and type it in. I'll do some requests at the end. Let's go to crypto, and then we'll look at some stock, just visual of what the earnings, because I skipped that part for the stream. Let's go straight to crypto, because everyone's wondering, what's going on with crypto? Are we going to go to the moon? Question mark. That's what everyone's wondering right now. So what we have to think about in TOTAL, crypto market cap land, I call it that. It's basically a chart, is we were in this descending triangle. We had the support level. We had the breakout, the retest. All right, this might be real then. We might hit this 1 trillion, yes, 1 trillion or right under 900 billion area. 900 billion, 1 trillion. That's the zone that we're stuck in right now. 1 trillion to 900 billion zone. If we measure this entire triangle, it's 55%. If it's going to break out to 55%, I mean, crypto traders would be rejoicing in their chairs. It would go to 1.437 trillion. Literally, it would go there over time, not one day, because that means the whole market has to go up. We have to think about it too, is because of inflation, less people, not everybody has discretionary income to just throw into their favorite cryptos for investing or trading. Not everybody. So personally, I don't think we're going to go to the moon yet. We have to see some signs. Inflation come down, wages go up, people need to kind of get more jobs. It might happen in April. Sometimes we get that tax return refund in the USA and we get a little bump up in the whatever cryptos because people just buy with their tax refund money. Usually happens. I'm looking forward to that. So we'll see. But in terms of the move right now, I'll check a weekly. The week's not over, but we have a little bit at the time of this stream, a little bit of a doji candle here, a little bit of a hesitation. This double bottom here was only 10%. We went 20%. We went double the target. So the target is complete. I would be very careful of, just in case we have a evening star pattern to pull us back down, just to fake out the bulls. If everybody's long, if there's no buyers left, you might have a little bit of sell-off, like everyone's saying, haha. I'm not laughing, but they're saying, they're going to take their profit and make sure they're not going to lose their profit. If they're a disciplined trader, that's what I mean. They're going to say, in their mind. Think about it. This example, the stop loss is right here, just right at 985 billion. So when we go to Bitcoin and we look, let me go to a different chart. Let's go to Coinbase, for example. The trend is still technically downtrend. We just had a nice rally to close out the shorts. Longs getting in their position to say, maybe this is the year for crypto revival, because nobody knows for sure yet, right? We just had the breakout. That's a good sign. Descending wedge pattern. Okay, this is starting to look like the QQQ NASDAQ chart. Measure move of this, I mean, that's too much, but you could see on the weekly, all right, A little bit of a turnaround. We have this open MACD. Histogram is pointing up. MACD lines are pointing up. The RSI was showing us bullish momentum and divergence to the upside. It's still building right now. We're towards the top of that Bollinger Band. Price is above the short-term EMAs on the weekly. So we have to, if you read my idea, my profile, what I said for Bitcoin was we have to close and hold above 25,000 because that's the 200 EMA, the horizontal yellow line here. We have to, the price needs to go eventually, if it's going to go down, that's fine. But eventually, if it stops, let's say we have an upside down head and shoulders scenario, break that neckline, hold above 25,000, then we know uptrend. Now we're going to moon. It would be on the way to mooning in terms of going to all-time highs for 2023. A couple years from now, can Bitcoin go to 100,000? It could. It definitely could. How would that even happen? If we hold above 15,000, we break above 25, imagine this scenario happening. Definitely possible. But people need money to buy. It's not like Bitcoin's going to go up there randomly with my eyes closed. Companies, algorithms, retail traders, investors, they need to have an active account. They need cash on hand to buy. Some of the traders that have been in this for a while, they might already be doing that, right? I'm talking about we need lots of capital and lots of buyers sustained for a period of 1 year. Is this the year? It might be. It might be. If it's not the year, okay, no problem. No problem. Sometimes you have to wait 2 years. Typically, though, from the 2017 to 2019 low, just about 1.1 years. From the 2019 high to the pandemic low, that was less than a year, but that's because we had government subsidized help, the stimulus checks. Everyone got stimulus checks. Also, if you saw that Yahoo Finance article 1 or 2 weeks ago, I'm paraphrasing the article. It's still on Yahoo Finance. If you're in my Discord, I put in the news feed. But paraphrasing, it's that 70% of people's household savings, I'm paraphrasing, but it's 50% of people's household savings have been spent in the lower income brackets. So from my research, that was something like $50,000 income per year. So those people probably have used at least 50%, people who participate in the survey. So then my mind is thinking, okay, that doesn't account for quote unquote, investors or like big money in terms of the banks or whatnot, but it's just, you don't have the hype right now because nothing's happening in terms of a huge uptrend. I shouldn't say nothing is happening. I'm talking about the big uptrend rally. Like when you look at this in the blue circle, that is not happening right now, but it might be the beginning of it. It might be the beginning. Where's the last time I kind of saw something like this descending triangle? There was a little bit, like I said, in 2019. If you kind of just open it, you had that one super flash crash on the 2020 low. You can kind of say this, right? You had the breakout retest, and then we had that FOMO moon rally. So you could kind of make the argument here saying, well, there's the descending triangle, so we could have the breakout retest and the FOMO rally. It could happen, or just a breakout retest attempt, and it could fail as well. So just always understand that 15,000, 20,000, these are our support levels on the downside that Bitcoin should never go down that low ever again for a year or two. If this is the real moon rally, that's how we know. That's how I will know. However, if it goes up and breaks back down to, let's say, 19,000, still okay. That would actually turn into an upside down head and shoulders bullish pattern. Still okay. So I just want to put that out there, that idea out there on stream is right now it has a little bit of a bullish bias, I will admit, because it did break out, but it's in the beginning formations of whatever it's trying to do, whatever the price, whatever the traders, whatever the investors are trying to do here. There's always that initial kind of maybe zone, right? Like this at May 2020 is like, maybe it might come down, but then it broke out, retested, and then we're not coming down. And then everyone bought. Same thing in 2019. We had the Bitcoin Cash Civil War. We crash. Oh, that was terrible memory, right? Symmetrical triangle. Oh, maybe we're going to have a breakout. And then we had huge $1 million investments in Bitcoin news. Oh, okay. Then we're going up. Same thing. What I'm looking for right now is, all right, we had a terrible downtrend since 2021 to 2022. Okay. We hit this low. We're not going down anymore. Lower than 15. We broke through 20. Good. Good. That's what I want to see. Retest it. We need to see the retest next. Two scenarios. It's going to break out and go crazy to the moon, or it's going to retest. And traders, that's where we're going to fight. We're going to have this circle here. Bulls, bears going to fight. Price-wise. Above 20,000, then that 20,000 battle will be the make or break for Bitcoin this year. If we can hold above it, 20,000, then you're going to get that confidence in the market of this arrow, the blue circle. Confidence that, hey, $10,000 held, I'm going to buy. Inflation is coming down, maybe I'll buy. Federal Reserve is not trying to raise interest rates, maybe that high anymore, maybe I'm going to buy. That's the kind of mentality people are probably having right now. We have to also get through earnings. There's a little bit of that relationship, because if all tech stocks crashed, maybe Bitcoin would take a hit down as well. But why did I spend 15 minutes on Bitcoin? Is because if you can nail down the direction of Bitcoin, you'll basically nail down the direction of the majority of the market and the altcoins. So if you just take a look at Ethereum, it's doing almost the same thing, right? You had a crash. Let me erase this. You have a crash. Actually, I'll go to a different one. I don't want to erase that. The crash down, and then you stop dropping. Where do we stop dropping? $1,000 support. Wonderful. Where's the next one? $1,200 support. Okay, then we get this little symmetrical triangle forming. Ooh, the breakout. People are getting excited. Now you're starting to see some setups. What's the measured move here? Very large, 100%. The conservative measure move, sometimes I do like a mini measure move just for a shorter term, 50%, which is still very large. 50% breakout would take us to 2,000 from the bottom of the triangle. 100% would take us to 2,432. So now with this basic charting, trend line resistance, trend line support, horizontal support, support 2, resistance 1, resistance 2. We just boxed in this price. So now I know if this is the target, it's going up here to resistance. If it falls back down, no problem. I mean, it's bad if you're in an investment, but if it falls back down, that's what happens. The support level, if 1400, we need to hold above that. But that breakout is a good sign. It's not quite the lowest price of all time for Ethereum. That's why I'm not hyper excited for it. We went from 786 support level to we're trying to test that 618. That's basically the play that's happening right now. So if we break out, great. If not, probably test one of these little pivot points. That's the target. 1954. I'm on a weekly chart, by the way. On a daily chart, you can see we broke to that pivot point, and Forex traders, you know what I'm talking about. When you have this pivot breakout, some people get real excited about that. So we want to just watch out for these support levels. Make sure Ethereum's not going to crash back down to $1,000 level or 1,200 level. If we can hold in this upper $1,300, $1,400, $1,500 range, you could have 1 year from now a beautiful rally to the upside for Ethereum. Assuming that there's no other huge negative surprise event that's going to crash the market, okay? What can be some examples of that? Government regulations, corporate regulations, hack on the exchange, fraud on the exchange. You could also have, just you name it, criminal problems, trader civil action problems, etc. Just in your country, there's many potential roadblocks, but the price is kind of your guide. And then if there's a fundamental change, if Ethereum or some of these altcoins, they do something actually different, that's big enough change. We have to remember, though, it's not the lowest price of all time. It was 80% off, though. So sometimes I like to think about crypto. It's like an NFT. Sort of. Okay, this is just a general example. So I'm just looking at the news right now. Wow, there's another tragedy happened in terms of breaking news. Very sad to see, very unfortunate. All right, so in terms of the stock market news, that's why we always keep an eye on the news. It's not very corporate specific news, but very, very unfortunate nonetheless. We'll see Ethereum going back to crypto. It was 80% off. So you have to think about it like a stock or an NFT is if this company or stock is good and it goes negative 80 or negative 90 or negative 95, negative 99% off, 80% off. Just think about it. You like an iPhone? What if there's iPhone 14 new for 80% off? Would I buy that? Yes or no? I would probably yes buy that as a consumer. Okay, I'm not talking about ethics or morals right now. I'm not talking about greed or fear either. I'm just talking about objectives. It's not so much subjective, it's 80% objective price. If I have a computer that's 80% off, it's still good condition, new, NVIDIA or AMD chip or M1, M2 chip on a Mac, 80% off discount is new. Would I buy that? Probably yes. Same thing when you see Ethereum. Ethereum altcoin. Yes. 80% off. What price is it? It's kind of a little bit pricey, $900, but it was $5,000. So I might buy some. Very simple. Very simple. It depends on the asset, though. If somebody brings me the most random penny coin or most random altcoin on the planet, that's where you get people get into trouble. That's why I usually focus on the majors, by the way. I only have 10 minutes left. All right. Let me see. Are there any requests in the chat? Any questions or requests on TradingView, YouTube, or Twitch? Or is this live stream super boring to you? I apologize if it's super boring, but I just walked through my process and I have a slightly higher win rate than most people. Like some certain days when I day trade, I have 100% win rate, sometimes 80, sometimes 70, 60. If it's really bad, if it gets like 50% win rate or something, day trading, swing trading, I'll probably stop at that point to kind of reassess what's going on. But last time I day traded, it was 3 for 3, 100% win day trades. I logged off and I moved on with my day. Had a good day, good week, and I'm done. But when I'm here on the charts, I like to put in extra time because it pays off. For crypto, especially if you're right at the bottom, I mean, if you catch these like one of these big dips, like on an investment, I mean, Binance coin from pandemic, you're up like 3,000%, 30x on the investment. That's why people love crypto. So volatile. It's like penny stocks galore, right? If you look at Binance coin on the weekly scale, I'm gonna logarithmic scale, by the way. We can see the old resistance levels and now the current action is consolidating to the side. Binance coin needs to establish its higher low in the price. Same with Bitcoin. Same with Ethereum. High, low, high, higher low, higher high. Where's the higher low? That's why the market, I'm not 100% convinced this is the support level. Not yet. Right here at $200, not quite yet. Because we're riding that 618. We had a little bit of, FTX volatility, which is really bad in the market. I should point out that certain exchanges have gone bankrupt this year and they're still having problems, bankruptcy and layoffs. So it's not really the best environment for us to go to the moon, but who knows? Sometimes market conditions, the market is not rational. It's not a logical, rational human being. Or I should say it's not a logical algorithm. The market's not like that. It's just human psychology, human emotions in reaction to whatever's happening in the world. So where are our targets on Binance Coin? Support could be as low as 170 to the downside down here. Where's our resistance? It could be as high as 440. Bulls will love that. 750. If Bitcoin goes to $50,000 or $100,000, definitely possible that Binance coin could go to 1,000. However, it's consolidating in this very large sideways wedge. But the fact is, temporarily in the market, we have found a support on Binance coin above $200. It needs to break out above $350. So now we see a little bit of this parallel channel right here. 43% to the upside would take us to approximately $500 Binance coin. Sometimes the large size, let's not get fooled by the price. If they have a coin burn or if there's a coin split, maybe this actually psychologically is only worth $33. Or if they have a 100-to-1 split, it's only worth $3. Right? So sometimes the number, even if though we have large numbers now, I mean, everyone would like to get $5 Binance coin again. But if everyone's holding, it's not going to come down that low. The only way prices are going to crash down like that is we need industry-wide problem. Government bans, government regulations that ban exchange. If crypto trading's banned, the worst case scenario, crypto exchange are banned tomorrow in USA, all prices coming down very problematically. Or like 1 month, crypto exchanges are banned. If that happens in your country or my country, prices will drop. People are going to panic sell. Why? Luna, FTX, perfect examples. So people are just kind of waiting right now. That's basically what's happening. Investors is waiting. All right, is this whole inflation interest rate thing going to fold over and not be a problem 2 years from now, 4 years from now? Then we might get a Bitcoin rally. If big crypto exchanges have legal problems, it might not be so pretty. At least in my opinion. Fundamentals can change everything too. Coin mergers, coin splits, new technology. I think what would be really great for crypto exchanges is if they remove trading fees, just like the stock market. I switched to the stock market because there's no trading fees. There's still the spread and there's still plenty of danger happening in the stock market. But the reason why I'm not over trading crypto is there's still fees. And if there's no opportunity and there's less, I would say less opportunity in crypto in terms of what time somebody's trading, because we have to remember back in 2017, 2018, it was like the wild west of trading. Everyone can just sign up for Binance or for whatever exchange, Binance.com. There's like 200, 400 cryptos, and it's like the greatest trading of my life, right? But now it's all government regulated. There's rules, there's laws. Exchanges have to move to like Bahamas or Malta, country of Malta. It's different now. There are rules, right? So I would say crypto exchanges need to remove the trading fees. I mean, everyone's going to get super happy about that when that happens. But that's a huge part of their business, so it might not happen right away. All right, let's get back on track here. Solana. Let me do this and I'll answer some questions. There are a couple questions on TradingView. Thank you for following. Thank you. The live chat doesn't refresh automatically, so I have to do it manually. All right, Solana having a beautiful. This is what I'm talking about. When you have this opportunity, 150%, you go from the low channel to the high channel. You just want to kind of watch out. It's getting into this overbought range. Once it breaks out of that channel, it's testing the neckline of this large head and shoulders. This should have crashed to nothing, but then the market traders still believe in Solana, the technology, the company, the crypto. It went from $10 up to $25. That's where we're stuck right now. Went from $10 to like the 0.88, 25 to 30% area. Excuse me, $25 to $35 area. Now you want to watch out for, okay, if we get this nice huge rally to the upside, you might get a bearish divergence setup where it starts to lose momentum and come down to the downside. You want to watch out for that. Same thing with Solana. If it doesn't break out and sustain and hold above this resistance period for a very long time, it could be in a lot of trouble because there's plenty of empty space in this circle to pull back. You could even pull back halfway, come down to $16. establish that higher low. As long as it stays above $10, no problem. And then you can have a rally. The bearish scenario is, let's say double top, pull back down, disaster for the price. Okay, we have a couple questions here. I'll answer the question first before the request. So somebody says on TradingView, this person says they have no experience doing this, but you have some money and want to try. Anyone good and want to help me? Well, I would say be very careful. Okay. Even though I chuckled, it's no laughing matter. It's money. Trading is designed to basically take the money that I'm going to quote Warren Buffett, paraphrasing. It takes the money from the impatient and gives it straight to the hands of the patient. It takes it from active traders and gives it straight to passive investors, slower investors. I would recommend to you, if you have no experience and let's say basically little to no knowledge of what's going on with trading, is 100% try paper trading first, which means it's fake money first. Because 95% of day traders lose all of their money within 90 days. That's 3 months of trading with no knowledge and no experience. That happens. Very somber, but very true statistic. So if you don't want to just lose all your money in 3 months, basically, then again, this is my own personal experience. Okay, this is not educational advice. I actually shouldn't be really saying too much of this. I should be saying, for education purposes, if you want to try paper trading to, learn more and practice, this is 100% the tool that will give you that experience of trading. You will very quickly know. You will very quickly know what's wrong and what's right. It might take you years to learn charting or trading, but there is no reason to lose all your money and then learn the lesson basically the hard way of blowing up an account. And I'm not just saying it to this one person, it's just to anybody in the future who's watching this, you're just getting started out. There's no reason to lose all your money, no reason to spend all your money and just give it away to somebody else. Better to just save it for yourself in this time of inflation, high inflation, and then just get all the practice for free here on TradingView. Practice stocks and crypto, and then just keep a log of it in like a spreadsheet or a Microsoft. It's probably better in a spreadsheet because you can just type in, all of what we did here. What was your buy? Did you buy or sell? What price did you buy at? Where was your take profit? It's like 5 lines. You could add some more things about like notes, remarks about what happened. Why, if I was wrong on the trade, why was I wrong? What was my mindset? Did I FOMO? Did I chase it too hard? Was there even any setup? Was there a pattern? What was I even doing there? So then you could learn that way. The only good thing about starting now is the prices are low, but the market is in this kind of, 55 to like 45 of bull versus bear mentality. But I hope that answered your question. To gain experience and knowledge, one of the ways to do it is just paper trade. But then you want to learn first too. It's not like it's kind of a difficult question to answer because there's so many variables. But it's like, what do I need first? Do I need the knowledge first? Do I need the experience first of trading or charting? In my opinion, you kind of need a little bit more knowledge first. Like you need to kind of learn first and then practice executing that knowledge and information in the paper trading. So you kind of have to learn first and then practice it. So immediate example that comes to my mind is like sports. You can't just be a pro athlete or a pro gamer or whatever you're trying to do, pro athlete, pro trader in one day or 1 year. Is you're going to have to start from the very beginning. And having good knowledge, information mentor, if you can, good teacher. There are other groups besides me out there on TradingView and YouTube that get you started. But then you have to have that core knowledge first, practicing the paper trading, and then the paper trading results will show you, okay, are you basically, if a trader's losing on 90 out of 100 trades, so again, that 90% failure rate, the failing rate, then the mentality should not be, how can I, become a professional in 2 days? The mentality should be, how can I get better 1%? How can I get better 5%, 10%? And then once you get to that level, you'll break through. And then once you learn enough, practice enough, hopefully that's the goal for every long trader, is to get more than 50% profitable, because that's a profitable strategy in the end. That's a very good question. And I hope that helped people. Because when I first started, certainly I was that statistic in terms of when I had zero knowledge about anything, any trade that I did just failed. Because if you don't know what you're doing, or if a trader just starts off day one and nobody knows what's going on, there's a very high chance to fail. So somebody asked me on YouTube, what are some good education resources? There's TradingView, this website, plenty and a lot of resources and education on TradingView. If you just click around live streams, you click around the ideas. More than half of what's on the TradingView homepage did not even exist 4 or 5 years ago. There's so much information. Even here, if you just kind of open up, let's say we're in stock earnings season, for example. If I open up, I probably can't do all the examples, but let's go to Apple. If we go to Apple, for example, and you kind of just open the watch list here on the side. Yes, there's the technical price over here on the left side. But then also there's some of this financial information for the companies on this right side. That's basically free depending on the account type. If you're a numbers guy, if you like the financials and you're trying to assess the financial health of a company, there's this. The overview is a great place to start. If you're a stock trader type of person, and you want to trade, you might want to focus a little bit more on the price, on the chart. Learning the tools on the left side, there's plenty of tools. If you want to get started like right now, then just open the tools, use all of them. That's what I did. Even if I didn't know what it was, I remember when I first started, I think I just pulled up a Bitcoin chart, and then I literally, for like one sitting, I opened every single tool and just went like this. What is it? What is the arrow? What does that do? What is this? Right? And then you'll very quickly find tools that just make sense to you. I changed the color. I think the default color is blue of a trend line. But some of these, not all of these were useful to me, so I just set it aside. But if something really makes sense, when I connected it, oh yeah, that makes sense. Oh yeah, you can see right here. Apple's in this downtrend in the parallel channel, the resistance, the support level, certain concepts is here in the heart line. Yeah, it makes sense. And you'll quickly see, wait a second, there's some kind of pattern here. When it hits that resistance roof, what happens sometimes? When it hits the bottom floor, what happens sometimes? Then the market, if you study charts enough, the books, the YouTube, the Google, TradingView, it becomes knowledge, skills, experience to you, and then you can use those skills for trading and investing. Okay. So I don't want this to turn to too much of an advisement channel. There's plenty of paid advisors and groups for that. This is more just, education analysis channel. All right, let me just move on a little bit. I kind of went super overtime here. I might not be able to look at all the stocks and whatnot that I'm doing. Somebody requested DOT. If you have a question or a request, just go ahead and let me know now. I'll probably do a little bit more, and then we'll probably have to close the stream out. I went past the hour mark. Thank you again for watching, following, and chatting. So DOT, USDT. All right. So what I've been saying for this crypto, DOT, USDT is It's hit a relative support level. It's not the absolute support level of this 275 range, 275, 278 down here. What I'm looking at is we went from this high of the mountain to the valleys of the low here, price. Now we had a breakout. You see this happening? Oh, okay. This is a perfect example to understand. Sometimes the breakout is fake. It's not real sometimes. You have this circle here. So imagine if I'm only looking at this one spot in the vertical pink line. If I'm looking at this one spot in the blue circle, I can say, all right, this thing's either going to go up or it's going to go down. So with this support level right here at 575 or 580, I'll just put in a blue line. That was our support line. So when the price went below that, it's riding this trend line down. It's like falling down a cliff or falling down a hill. It's like throwing a rock down the side of a mountain. It's just going to go down until it's going to stop somewhere. People in the market, it's either too oversold on some of these indicators, if you know what they are, or it's just the price is so low, or the market turns around like Bitcoin turns around, then it's going to hold. It's going to stop. Then buyers come in, they buy this thing up. That's how kind of this action on dot, it was tricky. It was tricky, right? Because everyone wanted to buy the breakout and they failed, and then people just kind of quit until right here when you have a little baby upside down hitting shoulders. Where is it hitting the target right now? It might have to bring in some additional indicators. The only good thing here on the daily is it's on up cross. So on the short term, you'll probably notice on your own charts that it's starting to, in the very short term for this year, starting to up cross. Now, that can mean two things. It's going to either continue going to the moon, or it's very temporary. What do I mean by that? Two things. It could either go up to the moon and just nonstop. If this is the real transition point of the whole market's going to flip around and we're going up to Bitcoin 50,000, 100,000, then all altcoins will probably go up. Where are the targets? $9, $14, $22. However, if we hit this resistance, the exact opposite of that argument, 725, 977, our resistances, it might flip over and pull back down to like $4. It's definitely possible. Definitely possible. Okay. If you are trying to get into aggressive trading with some swings, if I turn everything off, we look at the EMAs, we'll notice on the 1 hour that this thing is going up. So our 1 hours are holding, the 1 hour chart is holding our dips, right? So you could try to enter on one of these dips because it's trying to go up. So a dip might be an interesting entry point with, now this is getting too much into finance advice, but if I was going to do this, let's just say I bought today randomly right at this spot at 663. Not my strategy, but if somebody just wakes up today and says they want to buy DOT, the support is way down here. There's maybe more like 6% to about 12% risk on the downside over time. If someone's trying to hold this thing, let's say for 1 year, the immediate risk for investing could be up to 25 to 30% downside. What do I mean by downside is if this thing starts to flip down, it's going to go all the way down. It could go all the way back down to that level. And then the trade would be stopped out, or a trader would be down a lot of money in a particular trade. So the real risk, somebody should be risking only 1% of their capital. And I might get into that at the end of the stream. But this is not all in play, depending on your mindset, your account. It is golden cross on the upside to the 4 hours. So again, you have support levels here. 540, 573, $6. It's getting on the 4 hour looking like this little bearish momentum setting up. So watch out for a pullback on the 4 hours. Even the stock market, a lot of momentum on stocks were trying to come down. It's all earnings dependent. Once you have this kind of play, you might get this bearish momentum pullback, and then you might pull back all the way to like $6 or something like that. So you might just want to watch out for that. Whoever asked for this, you just want to watch out for that. However, if we have an ultimate bull rally, I mean, any dip might be a good spot. It's just once we have this exact picture snapshot setup, you might want to just be a little bit careful of that. Okay, somebody's asked for Cardano, and then we'll go to WDay, which I think is a stock. Cardano. Binance. All right. Thank you for this request. Cardano. Zoom out. This is what I do. Zoom out. Understand. First, okay, right now on the current price, is Cardano an uptrend or is it in a downtrend? My answer is on the daily chart at this moment in time, it's still in a downtrend, long term, daily. The third mode would be consolidation sideways, but is it going up? Is it going sideways or is it going down? It's going down. It has been going down. We have this nice rally, which is we've had these rallies before. Right, that's what I'm saying. It might not be 100% the bottom of the market, even though the prices are very low. How else can we look at this? There is a resistance. We just broke out of it. So there's a little bit of evidence that we might have the nice rising wedge breakout, or excuse me, descending wedge breakout. That happens a lot, meaning it's falling, it stops at some point. You have the breakout reversal. We have to imagine the price is, you can look at the past of Cardano. It was the same thing. It's downtrend. At some point, it finds a bottom, and then we reverse, and we just never come back down. So that's one way we know. It takes some time, evidence, to show up on the chart. I'll use this very steep downtrend, the 2018 to 19 action on Cardano. You can see it's just falling, and then at some point, it stops. So with Cardano, maybe this might be some relative bottom, tradable bottom of falling. Okay, we stopped and it rallied back up to where the 0.88, which is 40 cents. So now my line in the sand psychologically is I do not want Cardano to ever go below 25 cents. That's the final level for now. It could, I mean, Cardano can go bankrupt. It could go to zero. So understand that. Please understand that any crypto at any time could go to zero. That's the risk of crypto. Exchange, Cardano could just, hopefully this doesn't happen, but Cardano could shut down tomorrow and then Cardano is worth nothing. That's why we need stop loss, capital management, position sizing, etc. Where are the targets? Resistance target, 67 cents, $1.15. So if I were to randomly buy this, what's the risk right now? Sometimes you have to type in your stop loss of like a 25 cents. Okay, now we got this on the chart. It's a 35% downside risk. It doesn't have to go that low, but I'm just saying, you understand, you can see now that that's the low. So it needs to never go below that. It can kind of wiggle around in there if it wants to, go sideways or just like DOT, kind of slide down the hill. It could do that and then pop up. So I'm very closely watching. All right. Where's my, if we zoom in a little more, and this applies to basically probably almost every crypto, 35 cents support, 33 cents support, 30 cents support. If this thing just needs to hold, it could retest like the 33% support and then try to pop up. Or we could have a DOT scenario, 33%, and just fall down the hill. So 35% stop loss is very large. An account cannot lose 35% in one trade. So that's why the rule of risking 1% comes into effect. Okay, let's do WDAY. Hopefully that explained the current and the future scenarios for Cardano and the risk involved. So you just kind of have to size the position properly. And there's no wrong way of doing it, but you know, going all in at one spot in crypto can be very dangerous sometimes, because if you go all in at the top and it comes down, I mean, some investors unfortunately are down like negative 80% right now in their account. Very unfortunate. Other traders, maybe who waited for this opportunity, they might actually be up 40% because if they bought that bottom, it really depends on the scenario. Okay, let's do W day. Workday. Workday. Hopefully that answered your question. W day. Okay, so this is a stock on the NASDAQ, and there's some information here on the side that I like to look at sometimes. If it's a brand new stock, let's pretend this is to me. Workday. Okay, IT services. You could probably, Google Wikipedia the company for a little bit more information in terms of the fundamental history. At the way bottom here, there's a nice little summary. This never used to be here. So this is perfect. Has 15,000 employees. There's a website. What do? They make enterprise cloud applications for finance and human resources. Interesting. So it's a software company. Okay. Financial management, et cetera, for these companies. And they've been active for 18 years. Earnings is in 34 days. The volume, at least on TradingView volume, 2 million, market cap 44 billion. The EPS is negative, so that's not very for investment. I mean, they have profitability problems. They're not profitable. Shares 199 million, so base 200 million. Okay, so it's not a micro cap stock in terms of shares float. If you want to check the earnings, because we have earnings coming up, you just come in here and check out this information. But for me, you asked me about the trade. On a daily, this is Casey's example on TradingView of, let's just type in his numbers. He has an entry, long entry, 178, stop loss of 172.64, a target of 184. Did I do that right? Should be target of 184. The entry, I probably typed in the wrong box. That looks more correct. Always good to double check your numbers, even for me. All right, so it's a 2-to-1 play, 3% stop loss, 6%. Oh, excuse me. No, this still looks long entry 178. Stop loss 172 basically, and then a target profit kind of 184. All right, you probably need to open this up larger, unless I typed it wrong. Gotta open this up larger to really get that 2-to-1. So it got to be that 6% on the upside. Also, what's interesting with Workday is it's in the NASDAQ. It's in the QQQ. So I can imagine if QQQ is going to rally to the upside, it might go higher than 3%. Let me just check something on a different console here. Workday, okay, 6% or $6 possible daily move. So that I see where you get this number of the 3%. So just to, your stop loss might be a little bit close here. You might have to open it up a little bit, open the target, but that's really your discretion. You do not have to listen to me on that. It's your money, so you do whatever you want with your account. But in terms of the setup here, what I'm seeing, all right, we had this nice low, bounce double bottom off of 130, higher low. It could be trying to get this higher high up to like $200 longer term in a couple months. It's very earnings dependent. The price is trying to break out above the 200 EMA. We box in the charts. Basically a consolidation play. If we do it this way, we could put a parallel channel here as well. And so you can see the resistance is this blue line. So this is basically turning into a potential breakout play, which sometimes doesn't always work. And the downside, like in my Dow Jones or my S&P 500 example, if this double tops, just want to watch out for the double top, then it's definitely could come back down to 156 down here. You want to watch out for that. Nice that we're above the pivots. A little bit more information for you if we zoom in for the 4-hour. Okay, it's just trying to golden cross. All right, so the support is right at 160. Be a little bit careful on the 1-hour. Like I was saying before I came on stream today, basically checking in terms of the RSI on some of these stocks. Some of the shorter term stocks, like a 15-minute or 1 hour, is bearish, in the bearish zone. meaning we're not at the support zone anymore down here at like a 25. We're up here at like 80, right? So again, I just want to point out to people, if somebody's long, we just buying low, sell high is like the mantra. Okay. Buying breakouts sometimes dangerous. In the past, which does not always correlate with the future, with one attempt, two attempts, we already had three breakout attempts. So this one needs to really, really push through with the correlation with NASDAQ. What can we learn from this? There's support here at 135 and a very, very low support here at 132. So my style, in terms of just me, is I like to buy this at the bottom. That's my style. And then I just let it go. I let it run all the way to the top, take some profit at the halfway. Or if you want to hold it for 5 years or something, I mean, that 5 years is a really long time period, but you get what I'm saying, is just kind of watch out for that. The only good news I have is the golden cross to the upside. Watch for the resistance breakout or the rejection, whichever one happens. And it's going to be kind of a little bit volatile for a couple days, especially with the setups that we're having in a lot of these other stocks. It's approaching the overbought range. It can definitely do this in terms of December. So this is the kind of price action we might see. Last time it was above the EMAs. It was kind of like one of these peaks. So you might have the rally up and then a pullback because all the people taking profit, shorts attack, hit this support level and you might get one more. So that's what I'm saying. It might move around on you in your trade setup. Hopefully you hit your target. All right. Okay. I think that was a pretty good amount of question requests just to make sure I do everything correctly on the stream today. Hold on, let me get my list up. And we'll just take a quick look at stocks because we have to look at stocks, some of the earnings, what's happening, just at least the visual of what's going on. So Microsoft reporting earnings tomorrow, Tuesday, time making this video. So you can kind of see coming from Workday to Microsoft, doesn't Microsoft look very similar in terms of the price action? It's not the exact same, but it's similar enough that it's trying to do this, trying to pop up. So earnings, I'll just give targets. 259 is that resistance target. 230 is that support on the downside. Capital One. Capital One already have a little bit of a head start going into earnings in terms of the rally. Attempt here to like 107 or like 116. We rallied off of our $87 level here. Nice. However, I want to box that in. You can see if we look at it this way, this is not the first time it's hit this area. This is the second time actually for Capital One. It's already bounced off its low. Quite a huge range, a 25% range. So in a very bullish case, I'm not going to do the full 25%, but the next resistance up 116, 128, 139. The low support below 102, 97, 92, and then just kind of watch for that breaks watch for how the price breaks for the next several days. Tesla, the big one. Tesla. So just to give an example of Tesla, why it's not good to just invest in stocks or crypto and just close your eyes, because sometimes you get mega crashes. This is very fundamental based in terms of what is Elon Musk doing, what is he saying, what are the numbers that are the sales, the manufacturing numbers that's happening for Tesla. There's a lot going on here. In terms of the resistance and support level, it bounced off that 786 level, bouncing up to that 618 level to like a 159. But we're looking at there's just the two top line numbers, the very basic EPS and revenue. I would encourage somebody, if somebody's really looking at Tesla, even myself, to just look at more data, look at more financials, understand that, okay, the net revenue has been rising for at least one quarter compared to Q2 of 2022. It's very basic. Profit margins up a little bit, actually quite a bit, but it looks like it might set the higher low. Watch out for that. The total assets have gone up. The debt to assets coming down over time for the past couple of years. Cash flow at least is going up. Obviously, the investing has gone down because of what's happening right now. You can also look at the EPS forecast, what's going on here, right? Just spend a little bit of time in here and just look around. What's going on? Do I understand the basics of the company, the products, EPS of 360? And try to make a move on this. So I would not recommend for beginner stock traders to just jump in earnings. You have to, there's a real strategies to do it. It's very dangerous because some stocks, let me actually tell you about the dangers of playing earnings before, like basically making a bet before earnings, is if it has any bad earnings at all, it could crash down 25% negative in one day. It has happened before my very own eyes. So I don't really play earnings anymore as a stock trader. There are some option strategies that's more advanced. But as a stock trader, I don't really play earnings anymore because I don't feel like I have to chase things at this point in my life. I hope that makes sense. Is trying to chase 100 companies, you might lose your mind, basically. So I just wait for the setups to come to me, and then I personally, just a side note, I did make an entry in Tesla. And that's up very nicely right now. But for the earnings is, we just watch out for that. Literally. Where's the bottom price of here of Tesla? 108, $100 psychological as well. There's a very steep trend line that we're just right below that on the resistance side. So we want to watch out for, is this thing going to reject down, bad earnings, straight down to 108 or $100? If it's nice earnings, great, pop up. If it's going to reverse, if some C-suite change with the executives. Oh, you can't see. I'm so sorry. So sorry about that. Thank you for making the comment. If something goes wrong, just let me know. Let me know. Thank you. All right, so let me just rewind again. Tesla, I don't know how much I missed. Microsoft and Tesla. Microsoft, I was just saying that the higher low here, it could go higher on Microsoft chart. Just watch out for that in terms of the 250 to 223 targets. Tesla, all I was saying is that there was this trend line on the top side, and it could pull back all the way down to 110 or even $100, and then that might be super low. Because if Tesla has bad earnings, could crash down negative 10% to negative 25%, which would be above that $100 range. Then over time, we could get this W scenario, try to break out to the upside. I still have a target of 165 because I believe Tesla can rebound if they fixed enough problems in their company. But the opposite's also true, is that big banks and big firms, they have a very strong grasp on this. 1, 2, 3, 4. We could get one more fifth wave down on the Elliott wave. 1, 2. This could just be our fourth wave breakout. So that's why I'm watching it very closely myself. There's a couple more and then we'll end. I went along a lot longer today just to give some educational examples that I believe that maybe not everybody's saying on the internet right now. Boeing still matters. Boeing, one of our Dow Jones leaders, but Boeing airplane company had a very nice double bottom, nice higher low. This is our Dow Jones, one of our leaders here. Very amazing that we almost hit the retrace. On a weekly, this is what I call it. This is kind of an ugly chart. It's going up and down, up and down. We hit the 0.88. This hit that 618 retrace. You want to watch out a little bit on this because it's so overbought at this point. The price itself is losing momentum. So any bad news on Boeing, the price will decline back down to negative 20%. Somewhere here, okay, 167. It could stop about halfway, about like 197. If they have good earnings, you might get that last pop. If we measure the move here, it's a lot, 33%. 30% should be way up here. 227, 66%. Let's say if COVID ends, because I'm trying to put the pieces together, if you know what I mean. The news from the beginning of this stream, the FDA is going to make some kind of announcement decision on COVID shots and vaccines. Okay. Inflation might start to come down this year, hopefully a lot. By next year, great. Federal Reserve interest rate, how's that going to change? Are people going to travel more or less this year? Because my logic is if COVID infections and deaths in the hospital come down significantly, people might travel more for work, for leisure, just might be open. I mean, China opened their borders like 1 or 2 weeks ago. So the world's changing again. And the stock price already priced that in. Again, one more bounce up. Where's that next part? 265 area. That's what I'm watching out for. Okay, moving on to, let's do Visa. Haven't really done finance companies so much, but this is what I'm talking about. Sometimes you get a stock that bounces around in this large pattern for a very long time, and then you finally get one at this bottom of 170, and then somebody, if they were brave enough, just buy somewhere in this zone, long the low, and they will be up a beautiful 20%, which for Visa is very large volatile move. Now that it's out of this channel, we still leave that here. Now that it's tested that, it's trying to break free from the support resistance price prison, I'm going to call it. However, this bearish momentum is starting to form. It's not happening right now, but it's starting to form. A little bit of bearish momentum. This thing's going up. So at some point, any bad earnings, we could pull back all the way down to $200, $200. I would be very careful of that. Where's the target to the upside? If we could use a Fibonacci extension to the upside to kind of see where's it going to go. Maybe 230 to 236. I mean, if the whole market goes up a lot, maybe 271. All right, let's do two more. Let's briefly look at Intel, because that's a significant manufacturer of CPU chips, etc. Intel, we actually had the nice double bottom. So there's potential reversal signals in the market, and it's all earnings dependent. We had this downtrend, down. Then we found the support level, hold, high, low, high. If we can break out the W, this is going to be great. 20% target, where is that? 37.18, 40% target, where is that? $43.40. Right? We broke out of this trend line. Where is this? We just broke out of it. And so this could be a very significant move if the earnings are good. Support at $25 and $24.48. Let's go to the last one. I'm just going to do the Jets ETF. This is not really, if we just take a look at Southwest Airlines, American Airlines, Delta Airlines, JetBlue, similar, they're kind of on this right side of they're trying to go up right here on this right side. If I do the Jets ETF, you can see we have a nice upside down head and shoulders that a lot of traders, we traded this. Where's the upside target? 20%. The reason why I don't call it before earnings is sometimes if the earnings are wrong, this could just totally fail. So you can see we're right at the top of this resistance channel. Right at the top of this resistance channel. And so if it doesn't break out, you want to watch out for that. 20% target be where? 2250. Hopefully we get that. We're going to retest that neckline about 1850. So everybody just keep an eye out for that. But like I said earlier, is there are signs in the market that the market wants to go up. There's people, the psychology of if you keep seeing this pattern or this low, this particular pattern, this low, the market, traders, investors, their thoughts, their feelings, the psychology is yes, it's going to be difficult this year, but traders are trying to get in early. Investors are trying to get in early before the stock price goes up plus 25% or plus 50%. They're trying to get in here. There are multiple entries. The perfect entry is down here at the bottom, for example, 2-to-1 play, or even a 5-to-1 play. Sometimes you just let it run, right? But let's just pretend we had a 2-to-1 play. That's why they took their profit here. It got stopped out. Another entry opportunity for the second play that we have right now. There is this riskier potential third setup, which just got filled today in terms of closed. The second target to the upside, if somebody's going to sell the rest of their position, is that 2250. But watch out for the earnings. There's like 5 or 6 airlines that make this go. You know, they might report in tandem, but you just want to watch out for that. All right, everybody. We went way over time today. I tried to answer more questions. I'll probably do a shorter stream next week. But thank you so much for watching and following. I'm live streaming on TradingView, YouTube, Twitch. We also have a Discord. Thank you for supporting and donating as well to those people who donated. So please consider following or just let your friends or family just know about this channel. We're just trying to spread good knowledge, good information, and just try to make a group of educated traders and competent analysts and traders that know what's going on in the market. So with that being said, the next stream will probably be next Sunday. I usually stream at nights on the weekends. It's usually a Sunday night stream for me. I just do it once a week, and then I do my own business and trading on the rest of the week. So probably going to come back on Sunday night, the 29th, unless something major changes my schedule. So I'll see you all probably next Sunday. And thank you so much for watching. Have a nice day. Bye-bye.